Hi, I'm Leah Duncan. I'm a realtor in Utah County with Fathom Realty. What is earnest money? Earnest money is about 1% of the purchase price of the house that you're interested in purchasing, that you put down to show the buyer that you are keen and you want this house. That is what earnest money is. So that money is then held in what we call escrow. Escrow is like a third party that holds on to your money until the contract is either you're not going ahead or you are going to be closing. At which time, if you were to close the contract, then the earnest money that is in escrow, so a third party, which would either be the broker that your agent works for or the title company that you are going to be settling with, that money would get put towards your down payment. Say you are borrowing 80% loan, but you are going to be putting in 20% yourself. That earnest money can be used towards that or towards your closing costs that you're going to have when you are purchasing a house. Some other things I want you to understand is that while you have put in an offer, you will have 4 days to get this earnest money deposited. And while that money is sitting there in the escrow, normally about 30 days, this is your time to do what's called your due diligence. It's normally 7 to 14 days. This is when you have time to do a house inspection and make sure that, you know, there's nothing that is too alarming and too expensive to fix and to discuss. The realtor on your behalf would discuss with the seller agent about, you know, are you happy to get these repairs done? We'd like you to do these repairs, or we want the property this much cheaper because these repairs have come up in the report. During that time, you do have the option of being able to get this earnest money back. Okay, so if you get a home inspection report done and you are not happy with the things that come up, you can get your earnest money back. After the 7 to 14 days, that due diligence period, then if you move forward after that date, you will lose your earnest money, which is normally about 1%, okay? However, you can still have another contingency where it says subject to finance or subject to appraisal. During that time, when you're moving from due diligence to the appraisal stage and to the finance stage, making sure that the house is valued at what you are purchasing it for. If that is in the contract, you can also pull out if it has been way undervalued, and you can get your earnest money back. Then after that, if you decided that you didn't want to go ahead, then you've definitely lost your 1% money, okay? Once again, you can discuss how much you put down, how much you want to show the seller that you're serious and you want your offer to be accepted. They only take the money if your offer is accepted, okay? So that's the good part. It's not like you're putting down money, but the house isn't actually yours. After these 30 days where you've done your due diligence and if you've also had the contingency, if it's based on finance and it's based on appraisal, then at settlement, which might be, you know, another couple of weeks later when you're actually going to be transferring the funds from your bank to their bank, then that earnest money will go towards, like I said at the beginning, your closing costs or towards the down payment. The escrow, when it is in, the earnest money is in what they say it's in escrow, that is meaning like it's a legal agreement. And like I said, it's with the third party, the broker or the title company. I think that that's all for now. Thank you for listening. Reach out if you are looking to purchase in Utah. I would love to assist you. Thank you.